Larry Pitkowsky, one stock you like over at the GoodHaven Fund is Walter Investment Management. This is a mortgage servicing firm based down in Florida. They had a rough few years, but it seems like they really turned the corner and it's jumped in June. Why is that?
You know, Greg, Walter really cleared the air of a lot of clouds that were out there in the first quarter. They had strong earnings, they sold non-core assets, they put in a stock buyback authorization, and higher interest rates are better for mortgage servicing earnings. And by the way, there's a little bit of a short squeeze going on, we think.
And you're also bullish on WPX Energy. This is a Tulsa-based driller. They fell with a lot of the other shale plays last year. It seems like they've come back and stabilized, but what can take it higher?
You know, they have a wonderful new CEO in Rick Moncrief. He has cut costs. He has sold non-core assets for more than we ever thought he could. He's bringing down costs even further, and we think the business can be very profitable even at these prices, and we think that the assets are worth about twice the current stock price.
And you're also positive on Barrick Gold. They collapsed last year. Tell me you think gold is going to glitter again, and have they wrung out all the costs necessary? Because that's a big thing with these drillers.
You know, the top three reasons we like Barrick are John Thornton, and John Thornton, who's the very engaged new chairman of the board and a very active chairman of the board. He has got a lot further to go on cost reductions. He's going to bring them back to their glory days where they were the low-cost operator. He's reducing debt. And he's really agnostic on the price of gold, and we think they can do well whether the metal's weaker or stronger.
And you're also a fan of Dundee Corp. This is a conglomerate up in Canada. This is not a company I know much about, so why don't you tell me all about it?
Dundee is controlled and run by the Goodman family, who has a multi-decade record of very strong investment returns. We think the shares are selling for about half of what the assets are worth. The next generation has taken over and has a very energetic plan to really move the company forward, and we think it's not understood very well. And we think we like that the assets they've got, and we like the game plan they've set forth. And while the Goodmans are not a household name down here, up in Canada, they're very well regarded, and we think they're going to get better known down here.
And then finally, one thing in common with regard to almost all these stocks is they've come down quite a bit, and now you're getting in. Can you talk about GoodHaven's strategy, why you like to get in after the stocks have collapsed?
Well, you know, we never get our timing exactly right, but our history of many success over decades is that bargains are never found in what's currently popular. If you want to find bargains, which is what we're looking to do for our shareholders and for ourselves, you have to look at areas that are unpopular, you have to look at industries that are unpopular, because that's where the bargains are, and that's what we're trying to do for our shareholders. We are trying to put together a portfolio of companies where there's a lot of upside and not a lot of downside, and that means wading into areas where they're unpopular currently.
All right, thanks a lot for coming on.
Nice to be here.
And thank you for watching The Street.